You heard my preamble on the big five tech names. What's your scorecard for the three that have gone so far?
Well, clearly Microsoft is a big winner during earnings season, but Amazon wasn't too shabby either. And it's really, the story of AI and the impact that AI is going to have going forward. Amazon did a great job on their conference call talking about the impact of AI and how that's going to add tens of billions of dollars of revenue for AWS, which was something that investors really like to hear.
What they don't like to hear, Ayako, is consumer concern or macro concerns. And that was a business macro perspective that we got that led us down on the Meta front, for example, and maybe a little bit on Alphabet as well. What do you think about the resiliency of the macro picture for these tech names right now?
Sure. From a overall standpoint, all of these companies have just very strong balance sheets. And so, it's been a flight to quality to a certain degree for many investors who are concerned about the overall macro environment. Having companies that have high quality balance sheets, that have cash that is now generating, 5% plus, that's a huge relief for a lot of investors that they can rely on, despite the valuations being a little bit elevated, I think, in the near term.
And what we've seen over the course of this week is the idiosyncratic nature of big tech, some of them doing well on earnings and leading gauges higher, and then the macro perspective just pushing back, and over the course of the week, the NASDAQ is lower. Is AI, do you think, the silver lining necessary to allow these companies to continue to go up and to the right?
Absolutely. And I think one of the things that Andy Jassy highlighted on the Amazon call yesterday was just the impact of some of these AI technologies, whether it's Code Whisper for Amazon's AWS or Duet for Google and GitHub Copilot for Microsoft. All of these are going to produce productivity gains, just removing some of that repetitive code for developers. And I think that's going to be a big game changer and really speed up the acceleration of the changes and the impact that AI can bring across, not just for these three companies, but across the board for every company.
Ayako, it's hard to believe, but we're already basically in November. And Caroline and I have been thinking about the end of the year. We started the year with just mass layoffs across big tech and cutting back costs. How much of that is what's showing up now, particularly on the bottom line with tech, that all the pain that they went through, actually, it seems to have benefited them, at least financially?
Absolutely. It was... You heard all of these companies talking about cloud optimization, and that's really their customers sort of dialing back a little bit in terms of how much cloud usage they're going to have with these big providers. And, because of that, I think a lot of these, Microsoft, Meta, Amazon, they all pulled back on their own spend. And I think you saw them see the benefit of, the lower expenses, especially with Amazon. They talked about the lower headcount, in AWS and just, fewer engineers there. So I think that was a huge positive for them and continue to sort of strengthen their overall financial position.
It may seem premature, but I'm going to do it anyway. What does 2024 look like for big tech in your mind?
A lot of it is going to depend on the overall macro environment, but I think it is difficult to, slow down the impact of AI. And, cloud is still relatively early in its journey. There's still workloads that need to migrate to the cloud, and it's just going to accelerate, I think, because of AI. 2024 will be determined by, other factors other than just AI. But I think a lot of these companies can weather through that over the long term.
The reason why you're such a great group voice to have on is not only how you're having to navigate what I think Wealth Enhancement Group has, thousands, 49,000 households of wealthy individuals that you're helping manage their money, but your relationship having built up all the research analysis and then moving into portfolio management, you've got a whole host of tech companies that you own, Ayako. And are there any that are overlooked, or how do you think about the Cathie Woods of this world that feel that NVIDIA's and some of the big cap names are just too obvious when it comes to the AI play?
Sure. I mean, we, like a lot of the sort of value-oriented tech names as well. Oracle's been in that space as well, and Oracle's been talked about. Their cloud evolution has really come a long way. And so there are other names outside of just the big mega cap tech that we like. Accenture is another name that we like in the space in technology. They have consultants who are going to help all of these companies adopt newer technologies like AI. And so, there are other technology names outside of just the big five that we constantly talk about.
It wouldn't be a week if we didn't speak Fed speak. And, for our global audience on Bloomberg Technology, just give your perspective on why rates and the Fed and the outlook for rates influences your decision about your allocation to technology names in a portfolio.
It's a great question, Ed. We get this a lot. And, why do we focus so much on the Fed and interest rates? And I go back to just sort of valuation 101. Discounted cash flows, you have to use the risk-free rate, which tends to be the 10-year, right? So the 10-year treasury rate, and what we see there is what's used in order to discount all of those long-term cash flows back to the present. And that's why there's such a huge focus on what the Fed will do and how the treasury curve will react to Fed action. So yes, it is something that we continuously talk about, but it impacts not just tech valuations, but valuations across the board in equities as well as real estate and other markets.